Got going here so far. Again, working a short on an Elliot Wave B pattern after a full extended Elliot Wave move here. Again, let me just scrunch this up. Wave 1, 2, 3, a complex wave 4, A, fifth wave move up, A pullback, B, and so we shorted in the B wave, and we're watching for 80 to break down, and then this orange line, 799, 47.99 even is going to be really key. If they break them down under that, that's going to be really a key move to convince me that the riggers are going to back off and let the thing slide back in a normal ebb and flow pattern and not interfere with that. And a lot of times these C waves are very powerful, so they can they can often be hard for the riggers to fight against if indeed the sellers come back in. But it's hard to say. I've seen them come in and just squash these Elliott wave patterns. They're well aware of them. The riggers know exactly that they're happening, and they know it right now. They might even try to support them on this boomerang support line here. But if we can plow through under this 799, then we're going to watch for the market to move lower, which it's now doing, following the C wave Elliott pattern that we traded into here at 375. So let's see if we can knock the thing lower. Our target is going to be, as mentioned, the exact bottom of this fourth wave pattern. That's normally what you want to do. The C wave should at least move to that, but let me just move this up to 2 even, which is a little adjustment there. But that would be very normal for a move there and possibly even lower. I mean, maybe, just maybe, the whole bearish bias that we've had the last couple of days is going to kick back in here. In other words, traders going, yeah, that was a good move, but I don't know. I'm probably going to hit them again with selling. So on this trade, we're just watching for that pullback to 92. So far, the C wave is kicking in, and the prices are kicking in under the orange line, which we now need to watch 99 to hold back and watch for a further deterioration in price. And you can use the previous candles here to watch the successive move. You've got 97.50, 95, 75, 94 quarter. See what? You just use the bottom of the previous candles, and then 92. So if I was to, you could just actually do this, mark the levels at the bottom of the candle, and it'll tell you on a pure price action move. And you see under this one, 94 quarter, they should theoretically just dive down to that 92 area, theoretically. So that's what I do. I don't often do that in the room because I'm just kind of I'm not going to mark all these, but I'm doing it now because we're kind of working in the educational aspect of this pullback. So it takes a little patience, you know. So I'm just changing the color to orange because our blue lines. Now, seeing as how we're have a little time and this thing is working for us, I'm going to add more lines and make it even more confusing. Look, just kidding. But what I want to do now is go in and measure the Fibonacci retraces to double check these numbers here. So I'm going to click Fibonacci. Now what I'm going to do is measure the fib only in the third wave, fourth, and fifth because it's too extended here. So I'm going to go right in here and lift that fib right up to the high where we shorted them at 450, we're short at 375. And just when you thought we couldn't have any more lines on our screen, don't worry, I'll get them out of there pretty soon. But I want to compare. Now, here's what's interesting, and you'll see this. Look at this. So now I've got the Fibonacci pattern measured. And our question is, can we get 92 out of it? And we're watching the successive lower moves at these orange lines, right? Well, it just so happens that the first minor Fibonacci retrace is right here at 95.50, where they just exactly dip down to, which correlates with this orange line. You see that? The colors are almost merging together there. And that was, the orange line was measured on that candle. I just showed you how we did that there. But look at that. 95.75 is this blue Fibonacci. That's the first minor retrace, the first micro retrace at this white line here. They've already passed through that. So the big question is now if they can blow through 95.50. Now look at the information that's running the fibs just gave me. I'm pegging 92 at the bottom of the fourth wave, and look at that, the 50% retrace exactly at 93. So as a trader, I'm going to tell myself now 93 to 92. Now the full fib retrace is down here at 90. So 92 is a good location. There's a 50% retrace, but they've got to break down under this 95.75. So I would normally think, yeah, we're going to stick with 92 as our exit at the bottom of the fourth wave. I can see the Fibonacci right there, which would be the maximum stretch I would look for on this C wave move. So by combining all this information, I now am able to say we got to blow through 95. We got to get them trading under 95, watching 94 quarter like a hawk, and then really get ready if they blow them through to the 50% retrace, where a lot of times they'll stop. You know, again, this is where an area where rigor interference may come in and say, okay, we let them slide, but we're going to jack these prices back up. We're not going to let this thing keep sliding. So what I would say now, I'll leave 92 on a hard exit here, but if for any reason, and you see me doing this on the micro scalps all the time, if for any reason the market breaks 95, half 95, and takes a hard dive down under 94 towards 93, I will probably just reach up here and hit the close button, because there's too much of a congestion of key numbers here on an extremely bullish day, pegged for a bullish day. So do you see what I mean? Putting all this together, I know it's a lot of information, especially if you're brand new to the room, but just the opportunities there, so I'm taking advantage of it. And a lot of you are still here in the room, which is most appreciated. But and if you have any questions, you can ask them, because we are, like I said, in a sort of training mode right here with this stuff. But so right now, the big thing is watching for the pattern to fulfill, or for the riggers to rejam the market back up over the micro fib retrace and start pushing it back over 4,800. Then the whole deal's getting water thrown on it by the riggers, and it looks like they're trying to do that right now. You see that? They took it right down exactly to the first minor fib retrace, and now they're jacking them back up in full rigger style. See the spike candle? That's where you can always kind of detect rigger interference, where the big spike candle. Now one could say, well, other traders are watching this pattern that you've clearly identified, and they're just buying the first minor Fibonacci retrace because it is indeed a bullish tape. And that's why I do all these studies, because I want to, it's just me. I got to know what's going on as much. I got to detect as much information, correct information, that I've learned over 26 years of trading as possible, because I don't want to lose and I want to make money. And in a case like this, which is a rare short into a B wave pattern looking for a C wave pullback, it's a much higher risk deal because my God, you're got a lot more risk. Now you might have a question about moving the stop and all that. I'm not worried about that. I mean, if they one might ask, should we trail the stop and all that? Well, I'm not a big fan of trailing stops because markets retrace so much. So it goes up and gets hit. Oh, I got 2 points. That's good. And then they go down to 92 as planned. So what good did it do you? We need to watch the market. The key is watching the numbers. So let's see now if they're willing to break back down under 96 down here. If they go back down to 96, that will tell us that they are going to try to kick it down to the 50% level, most likely, maybe lower. But it's a big question right now. You can see they're trying to pop it back up here. And that's part of the fun and disappointment, if you will, of trading these larger swing trade positions. And that's why we go in and scalp, micro scalp, scalp, whatever. That's just what over the years, I've just learned to like that. We have other recordings on our YouTube channel of swing trades. One I was fortunate to get it on recording. 24 points. It's set up exactly like I'm showing you here. And we'll take those trades like we do with this one in the room. But they carry a lot of risk and a lot of potential disappointment. This thing's already trying to work its way back up to our entry at 4803.75. I need it to break back down under 47.97, and it's not doing it. There's, the rigger's got a big stake in trying to jack the market up here. It is pegged as a bullish day. Let's see if this thing can break back down under 97 and start to work its way down to where I think it should go, which is at least a 50% level. Now, based on the way they just recently acted here with that rebound and that kind of hyper spiky rebound here, I'm immediately going to move the exit to the 50% level at 93 because I'm kind of losing faith that the riggers are going to allow an Elliot Wave, C wave pattern to go all the way down to that 92 level at the bottom of the fourth wave pullback, which was right here. You see that? And the fact is that 50% levels there too anyway. There's just this little dip to 92. So I'm just moving it up, combining the information there. Hey, it ain't over till it's over. You know what I mean? It isn't over until the trade gets stopped out or gets fulfilled. Now notice, by the way, if I was being cute and I said I'm going to put a trailing stop in to below our entry because I want to make sure that we don't lose money on the trade. Kind of old trading kitchen wisdom, but no longer valid in my view, at least the way I trade. You would have got stopped out there at 48.02. Congratulations, Now you got a point profit, and this thing, it takes time. They may still work their way down to 93, and you and your trailing stop got out with a point of profit. I'm just saying, if you go into these type of swing trades, I don't see any harm in moving it to 83 or maybe a 1 point loss, 84, 85. We got short right near that high, so are they going to try to pop 450? Are the riggers going to try to pop 450 and rejam a new high? That's always a big question, Can they, will they? Are there enough bulls out there? I don't think there's enough bulls out there that are bound and determined. I think it's the riggers. That's why we identify them a lot. I don't think there's all that many bullish traders. It could be, but we'll see. So now we're back to watching the micro fib level. Notice how they did bounce up to uh, 81 quarter. I'm sorry, I said 82 earlier. 81 quarter, whatever. You get the idea what I meant. Now they're retracing the micro fib and they're breaking through it. So now 97.50, we're back to working these numbers. 97.50, 575, last dip right to the exact fib. And I'm still, based on the pattern, expecting that they should be able to blow through this micro fib retrace at least to 94 quarter, which was that next measured low, and then ideally down to 93. And the truth is, if the sellers come back in and want to really hit this thing where the Dow's only up 90 or whatever, they're easily going to go to 93 and probably down to the full fib retrace at 90. Well, again, thank you for your kind remarks and comments. I'm just I look at, I'm just doing my job. This is why you hired me, and this is our room, and we're very thorough, and I can say a bunch of stuff like we do more than any other room and all that, but I just, let the results do the promotion. That's what counts. And I record a lot of these things so they're on perpetually and others can see them. So that's good enough promotion. The promotion means you do a good job and people like it. That's what counts. Especially in this industry, which is the trading room industry. I mean, my God, I almost hate to say it, but there's so many frauds out there with phony track records and stuff. It's just like, you know, it's a little bit rough being part of that industry because you're almost lumped in with all the frauds. But I don't worry about it. I just do what I do, and I can't worry about the other 500 trading rooms out there that don't produce any results. Some do maybe once in a while. I don't know. Look at that market taking off right back down to that key 96 level. Let's see if they break it now. If they can break 96. And so right now, here again, I'm going to restate what you hear me doing in the room all the time on these trades. If they break under 95 half and we get a fast dive, like I mean not a slow grind, what I call a slow grind lower, but a fast dive from 95.50 that just gets smashed down to 94 or lower, I'm not going to worry about a few ticks trying to achieve 93. If they make a hard fast dive under 96 and they jam them straight down to 94, I'm probably going to go up and hit the close button. See, I got my finger right on it here. And that's, for me, that's just, to me, it's common sense, especially in light of how bullish they're turning out to be here today. You know what I'm saying? Although the underlying is bearish, and I'm still looking for a move down to ES 2100 or lower, um, exactly in the moment we're in now with this price and this market trading 47.90, if they take a hard dive under 96 and they ram that market down to 94 or lower on one quick move, I'm going to clip the trade because I got to cut the risk, because they could go down there and get grabbed up and just ramped straight back to 4,800, and we would have missed that nice opportunity. I'm not saying they're not going to jam them up higher before that. They could do it right in here, but let's stay ready for that. They got them right down there, 96, watching 96 to break. If it does, and there's a seller pile on down to 94, and you see a 94 print, then we're going to just clip the trade out and forget the extra point. Who cares? And a lot of times I'll do that with these type of setups, and they will do that. They'll dive down there and I'll clip it, and they keep going. And that's just, if it was a little more bearish up here, oh, I'd be holding them down at least to the fib retrace. this is a very bullish day, so we got to really be careful. I mean, any break under 95.50, we got to really be ready to jump out. I hate to say that, but it's a fact. 95.50 breaking, especially in a hard dive down to 94 or lower, we got to get out. So here we go. Let's see we go. Let's see we get them. Watch for 96 or lower to break for a possible hard jam down to 94. You can watch the volume meter over here. Whoops, sorry, I didn't have that reset. Volume's okay. It's slow volume. But watch, if we get a hard dive, watch one of these individual red candles or histograms to spike higher. If so, it's a selling pylon under 96, but we're going to take advantage of that volume spike because it's kind of slow volume right now. And, the overall market's kind of bullish here. Now, someone might ask a question, and I appreciate your kind and encouraging comments. I like this, as you can tell. Um, One might ask, what about taking 7 points here on this move and locking in that? That, if you're in this trade or you're in the room and we're doing one like this, it's up to you. I have to put it on your shoulders because we're both sitting here, and I may be right that they break down, and you may be right with that idea that 97's it, and boom, they're back to 4802. But neither of us knows for sure. The pattern, the dynamic trend bands, the crossover, it still looks like they got room to break down to 93 to 94. And I would say, honestly, that there is, because of the way things are acting today and all that, I don't think that's a bad idea. Clip them at 97, take, what would that be, 675 points? But the trader in me, the trader, even if I just in this trade myself, say we close the room like I did, I saw this, I put this on, I'm sitting in this, the trader in me tends to want to wait for the fulfillment of the pattern and handle the disappointment of a ramp up back to 4802 and say, it didn't work, clip a point and a half, and that's it, kind of done with it. Kind of I'd grumble a little and say, these damn riggers are just still playing games with the market. What can we do? That kind. Rational. I look up at my sign. So what? Who cares? Big deal. No big deal. I look at that sign all the time. Keeps you in that nice state of mind of not caring. We're just following a proven system, and it's like a cop. I've never been a policeman. I've known cops. I had a wonderful neighbor who passed away. He was a LAPD cop for a long time. He helped me with one of my big seminars when I was first starting out that I did in Florida. He would worked with me as a bodyguard. We had 300 people there, and he was off out of work, and I just said, "Look, these are very nice people. They're not going to have any problem." But every time I'd get off the stage and go walk around in a break, I'd have 40, 50 people around me. I said, if you just come along and um, keep an eye on things, watch my back, that'd be great. Wasn't worried at all, but you know, people can sometimes perceive they subscribe to your newsletter and they don't follow it and they put on a trade that they made up. But I've had people where they perceive that I screwed them over because they read my newsletter wrong and lost. They traded too big on a trade and lost a bunch of money, and that somehow is my fault. So again, I wasn't worried in the least, but just a little comfort when you're walking around, you got people all around you, 30, 40 people. Anyway, I don't think any of you were there at that, but we had a great time. We did one in San Diego. You see that picture of me on the web there. When you get your login email with me giving that webinar or that seminar, that was back then. 322 people at the one in Florida. 12. There's a dozen floor traders there. It's amazing. Learned a lot. Talked to those guys. See now this market. See now. Okay, the theoretical kind of imaginary character that I made up that said, what if, nobody asked that question here in the room, but what if you take profits here at 97 and look what happened? Sure enough, they bounced right back up. I didn't get out. I would look more for a break even type stuff. I got to let the system work its magic. This is a C wave. They should go down to 94 area. They should break under 96. Maybe they're not. I'm just saying, I put that imaginary character in that says, what if we just take profits at 97? I'd say, leave it up to you. And look at that. We had that bounce back, but all of a sudden they're kind of getting hit again. Will it hold? I don't know. I did say that's probably not even a bad idea. But I tend to want to let the system play out. And someone may say, didn't it, maybe it already played out at that minor fib retrace. Well, it's starting to look like that, isn't it? And in hindsight, I didn't have the fibs up at the time that they went there. Or yeah, actually I did. That probably would have been smarter to clip it there. This is why I like my scalps. I don't have to think as much other than get the right position and just try to figure out if that trade has got the market force working for it or they're kind of working against me. Then I just get out of the trade, try to clip it early. Hopefully they don't scream against me. But these swing trades, I admire guys that do these. A lot of guys that do these for a living, and I do them. I have a method that works, but I don't like. I mean, I don't like them. I like them when they pan out. Let's say that when they pan out, I love them. Like this one, I don't like this one because it's grinding me. And they may still go down to 93, but we got to go through this grind, and that could be a weak rigor response or just some bulls thinking it's still supportive. But I got to let it play out, and the pattern to play out right now, I'm thinking another trip back down to 95 would probably be smart to cover them. And you might ask, where's our stop? 450 was a high, so stop at 550. And if the riggers want to go in there and blow out the last high, then good for them. But on swing trades, this one reason I don't like them is you have to use wider stops. I'm fortunate that I have the method I'm actually recording and showing you here on this video. I'm actually recording this so you'll have it on YouTube to watch again. But I'm old school. You gotta hold them with a stop until the methodology either pans out or it doesn't. Now, right now, they're starting to pan out back in our favor. So we might get a pile on. We may get that pile on down to 96 or lower. Maybe. I mean, this is some serious selling resistance against that ramp up. So the big question now in my mind, some of you may still have not wrapped your head around the fact that the riggers are ever present in these markets. By the way, they're not trading the mini NASDAQ. They're putting their rigs on in the cash NASDAQ composite up here. They're pushing one button and buying 500,000 shares across the board of all the NAS stocks. That's the kind of capital they got. I explained to you already whether you can't say you believe me or not. It has nothing to do with belief. You have to read the report and see the proof of the Government Accounting Office. The Government Accounting Office of the United States of America took them in and had a hearing with them. One senator, one lone senator, the only one who had the guts, was there. I watched it with my own eyes. It's no longer, you can't find it. I maybe in the C-SPAN archives it's there. And he's asking this comptroller of the Fed, the Federal Reserve, that's right, the Janet Yellen, Bernanke, Greenspan clown show. And he's asking this comptroller, what happened, Madam Comptroller, to $17 trillion? And she's saying, well, we're looking into it, Senator. And he was just aghast. He goes, you're looking into it? You don't know what happened to $17 trillion? This charade went on for about half an hour before he ended the session. He asked her 10 times, and I recall, 8 to 10 times. He'd pause, he'd get frustrated, he'd look at some notes, and he'd go, okay, this and that, and this and that during this period. And again, I'd like to ask you, what happened to $17 trillion? Don't you have any accounting in your books of that? That's an extraordinary amount of money. That's half of the United States gross domestic product. We're looking into it, Senator. That's all she would say. It's unbelievable. So that they took that money and formed rigger banks around the world, and they started really practicing it back in 2004. That's another story I can tell, but not today. I got contacted by, well, some very large traders who were complaining about the rigging, and they asked me if I could help them. I said, I don't know, what can I do? I had a popular newsletter at the time, but, you know, anyway, you can get that report from me if you'd like. Just email me at mohan@daytradersaction. I'll send it to you. Shows the proof and what banks that $17 trillion was deposited in. The theory part on my part is I believe they created worldwide rigging desks to manipulate the markets. And now everybody thinks that. All these billion-dollar hedge fund guys are coming out and talking about it now. Where were they in 2001 when I first started talking about it? Especially through 2004, 2008, 2009. I was talking about this all the time. Anyway, the point is that we see it on a micro version in these markets here, and I identify it. I'm the only room out of 800 rooms that does this. I haven't been in all 800 rooms, but I'm practically guarantee I am, because these people don't even understand that the markets are rigged. They have some sense that it is, but they don't know the details. That last spike up there to 81, I started watching that to try to determine if it was rigger activity or just some kind of buyers trying to buy the dip. It looks like it was just some buyers, and that the riggers aren't really super involved in this market today. It looks to me like, and this is a big if, they're going to let it slide down and fulfill that C wave down to 93 to 94. It looks like that's what they're doing. They're not really trying to push it too much, but I'm sure they got their finger on the button to try to. They may have very specific instructions to support the market, like we saw them support it exactly at this minor fib. They may have instructions to support it there. That's why I'm kind of pondering that maybe we should take profits on this deal just to be safe on any dip down under 96. Because, if they ram them back up to 48.05, then we'll be glad we took them out. If they say they ram them down to 95 half, again, it's double bottom type deal, we'll be glad we got out. Right? So I don't know. Honestly, this is just a real mixed bag here. It is a bullish peg day. It should be pegged for a bullish leaning close, and it's still mid session here. We're just into the mid session. They started to roll the prices back there, right? But they're not kicking it under 97. So the whole thing goes into limbo now, and it strikes me, you can see the widespread in the dynamic trend bands. Another cautionary note here. It's only 3 points. They should have lower to go, but the fact that they're spreading out here like there's a little bit of a cautionary thing. So with that in mind, I think on this trade, although I think they still have their destiny is still a move down to 95 or lower, I'm going to go ahead and just close this out here because it's just becoming too much of a grind and it doesn't really need to hold that much longer. So anyway, I got to share with you a lot of education on this tape, and and based on the bullish setup here today and the fact that now the riggers are getting a little more active, hiking the prices up, we just close it out with a small gain of approximately a 0.75. Didn't let them run up and hit the stop. So that's cool. And again, good educational tape. You can watch it again on my YouTube channel if you want to review what I showed on there.